Okay, so to get into the key concepts, basically we have these eight or so really foundational material or foundational building blocks to the market profile, the meat of the market profile concepts. All right, and again, we discussed this before. It shouldn't be anything terribly new to you guys. It's just how we present it, right? How we aggregate the material you've already seen together in a way that is pertinent to what we're talking about. So the first is the initial balance. It's a very, very important concept to understand. Okay, that is the trading range that is established in the first 2 hours of trading. Okay, so let's take a look at an example. Let's quit this. I don't need that anymore. Okay, so today's initial balance was really, it kind of didn't really form, right? When you talk about an initial balance, right, you're talking about a range that is established, right? This blew through everything. Okay, so when we see a lot of momentum here, as we'll take a look at the volume here, what this reflects is a lot of buying, right? And it's really just off to the races here. There is no initial balance formed. Okay, so if we zoom, you know, or kind of come back here, and we take a look at, for example, the February 6th. Okay, we can see some balance has formed. Okay, and I'm going to go ahead and draw that. And there's a reason why I want to do this, is to show you. Come on, yeah, here we go. Is to show you the importance of this initial balance in trade. Because this is a great example. So let's rewind this to about, let's say, the first 2 hours of trading is a good way to do it. So let's rewind this to 11:30. Okay, so remember the opening is 9:30, and the initial balance forms within the first 2 hours. It tends to be a little bit before then, but we're being generous here. Now, what I'm trying to draw your attention to is this. When you have, this is a specific case for the initial balance, but it's a very good one, and we'll study it later in depth. But I'm trying to convey to you the importance of the initial balance, and here it is. So the initial balance is formed. All right, it's between, this is the S&P, and we're between, say, 3,335 and about 3,346 or so. So about 10 points. Okay, but look at where the action is. Okay, if we let's see if I can get my histogram here. Okay, so this histogram is taking into account the whole day, so it's not entirely fair, but you can kind of get a feel for what I'm trying to get at, is that most of the trading action happens toward the top of the range. Okay, as you can see from these histogram bars here. Now, what does that mean? Well, if I'm trading toward the top of the range, that could give me an indication that I'm going to break through. And these breakouts don't tend to be very quickly. It tends to be more like drift, which is exactly what you see here toward the end of the session into the Asian session. Now, granted, of course, we have this little retracement here, but the point is, using the initial balance, we can determine where the markets may go later in the day. Okay, so for example, if we see this behavior and we wanted to take a trade on this, we may wait for a retracement. And where is a perfect retracement? Well, if I take the Fibonacci's of my the initial balance here, and I see that, notice it retraced right to this 50% mark. Okay, that's not an accident. That happens all the time. This is why Fibonacci's are such a great tool, is because this is the context of the initial balance, but this is really any range period or any between any two anchor points. You're going to see the asset almost always respect the Fibonacci level. So this is an example of a trade that you could have taken based on the initial balance alone.